Hello everybody, this is Lara at pureelliottwave.com. I am going to analyse Kadena for you today. After this one, I've only got 8 markets left on my list, so I'll be working through that hopefully at a rate of nearly 1 a day for the next week or so, and then we'll be having a voting system on what free analysis you want me to give you next. The first thing I note for Kadena is from this low to this high, this upward movement looks like a 3-wave structure. It does not look like a 5. I think I would have a really hard time trying to see this as a 5, so this looks like a 3, which would mean that the larger trend for Kadena would be down. Now it could be 1, 2, 1, 2, but this bear market is now much longer lasting than this bear market, so I wouldn't want to label that a lower degree and this a higher degree. That just wouldn't make sense. So I'm going to label what I see. This is my weekly chart, well this is a weekly chart, so I think this should be a primary degree wave over here. ABC looks like a zigzag, doesn't it? B looks like a fairly good looking 3-wave structure. I think it might be problematic to see A as a 5 though. Oh no, that'll work, okay. Particularly if you have 3 up here and 4 down here. Yeah, that's going to work. Okay, is C going to subdivide as a 5-wave impulse? It looks like it could. Nope, I'd want to put this here and this here. Is 3 going to be the shortest? I don't think so, no, because this is a semi-log scale, so 3 is longer. If there's a 3 to the upside, then there should be a 5 to the downside. Oh, it could be A, B, C, a huge expanded flat. So there could be a 3 up, a 3 down, and then a 5 up. The 3 down would be expected to move beyond the start of A, though, and this low is just over 12 cents, so that would be pretty low. I think this looks like an unfolding 5, so I'm going to put that in at primary degree. Oh, not sure about that actually. No, oh no, it could be. Yep, and this looks like an impulse. Yeah, that looks okay. 3rd wave has a curved look to it. Well, that looks like a triangle actually. Well, you can't have a triangle in a 2nd wave position. It could be wave Y of a combination. I'll have a look at that at a lower time frame. And so wave 5 has moved below the end of 3, avoiding a truncation. It's a lot shorter than 1, and I would expect it to be, because if it were to be equal, that'll take us into negative price territory. That doesn't make any sense. There's no lower invalidation point for this one. I do not like the look of this chart at all for an investing point of view. Let's save that and create a daily chart from it. And the first thing I want to look at is the structure of intermediate 2. This looks like a triangle. It could have been over here, and intermediate 3 could have been over here. Will that work? Let's check that first. Let's expand that out and have a look. Will the 3rd wave work? Looks like it probably will. Don't like, oh no, 1, is this a leading diagonal? Checking the wavelengths. 3 is shorter than 1, 5 is shorter than 3, and 4 is shorter than 2. Do the trend lines converge? They must for a contracting diagonal. Yes, they do, and there's an overshoot for the 5th wave. That looks really good. Okay, let's have a look at the 3rd wave. Can we get an impulse in here? I think we will. Nope. I would put 1 over here. You'd have to look at a lower time frame to see if this low came before or after that high. So let's put it here. Is this going to work? Yes, yes it is. Nope. I would put this here and this here. Yep, I think that's going to be fine. Okay, so intermediate 2 could have been a zigzag, and instead of a triangle, this could have been a series of 1, 2, 3 overlapping 1st and 2nd waves. That will also fit. and intermediate 5 is below intermediate 3. There's no truncation. Could primary 5 be over? Here's the low. No, I think I want to see 3 over here, and then 4 an expanded flat. Has a pretty good fit. And now 3 is an impulse. And now we can see this downward move here is a B wave. That doesn't look like a very good fifth wave though. I think it'll be better if it's incomplete. I'd have 1. Oh no, because there's going to be an overlap. Why did you put my 3 down there, motive wave? Yeah, no, 4 is in wave 1 price territory, so that does not work. Wouldn't want to see this here because then it's ending in a truncation. Oh, well, that's actually quite bearish. So if I can't see 3 and 4 over here, because 4 may not move into 1 price territory, that means that if I want to have 1 and 2 over here, that means 3 is incomplete. That's really bearish. This is what I have to do then. And the third wave, incomplete. The middle of it, that is, minute 3 of minor 3. That's really bearish. Oh, I don't like this chart at all. This is not good. I'm just going to check that this flat correction for minor 2 is not a running flat. Yeah, no, C moves beyond the end of A. That's a regular flat. Okay, well, that is really bearish. I don't think this final fifth wave is over. Now, let's have an alternate though. That could be more bullish. If this is a zigzag, oh no, that doesn't work because this is now, no. I was just going to say, what if a zigzag was over here? Well, there's a new low because we can't see this as the final low, because if this is a new trend, B or 2 may not move beyond the start of A or 1. Well, a new trend at this degree would have 1, 2, and this is a corrective structure. This is obviously a 3-wave movement. This is really bearish. Nope, can't see a good bullish count for Kadena. I don't want to spend any more time on that. I don't think this is worth my time analysing, to be honest. So let's have a look at this classic analysis real quick. This low down here, weekly chart, hammer candlestick pattern at the low. Actually 2 of them, hammer candlestick patterns at this low. And now the current low, declining volume. Volume increases up to the high with a spike at the high. Prices closed below previous support, which was 1.42896. Next reasonable support below 0.794693. Quite a lot lower than where price is. That's bearish. A huge volume spike at the high. Volume pushing price higher quite strongly. Price is essentially falling of its own weight. What that means is it could be that price is moving lower due to a lack of activity from buyers rather than increased activity from sellers. So a shorthand way of saying that is price is falling of its own weight. And it can fall far and fast like that with just a lack of interest from buyers. Price can just keep falling. It keeps doing it and volume is getting pretty light. On balance volume, not making lower lows with price. The close here, 1.634424, and the last close in the last completed week, 1.26. A lot price is reasonably lower, on balance volume is higher, so there's some bullish divergence, but I'd rather wait to see a pivot low form before I really considered that. ADX is declining, the negative DX line is above the positive. At the weekly chart level, it's not actually caught up with the fact that there was a high here and it's been in a bear market since the high in November 2021. And it's fallen substantially. That high, $28, the close at the weekly chart level, $22.73, and now it's just over $1. ADX is not caught up with the fact that it's in a bear market at the weekly chart level. At the high, no bearish divergence between price and RSI. At these lows, possibly very weak bullish divergence, too weak to really note between price and RSI. RSI is not oversold. There's not an extreme downward trend. There is potentially a long way for this to go. This close here, 14.148635, and this close here, 1.67 year, no bullish divergence. Price is closed higher, money flow is higher. It's confirming that low, or the close here, is higher than the close here. ATR increasing throughout the end of this bullish run. Lagging, it's a lagging indicator here based on a 14-week average, continues to increase after that high and now shows a strong, steady, continued decline. A lack of volatility in this market, and stochastics oversold. Finally, at the weekly chart level, I can see no bullish candlestick pattern developing at these lows. Let's quickly look at the daily and then we're done with Kadena. I don't want to spend too much time on this. At the daily chart here is a hammer candlestick. This looks like a dragonfly doji, gravestone doji, but it's not in the correct context, so it's not a bearish reversal pattern. This has got a bullish long lower wick. Here's another bullish long lower wick. So a little bit of bullishness about these lows. It could just be a short-term low though, an interim low. Here's a really strong bullish engulfing candlestick pattern. Didn't lead to much though. Just a few days of upward movement. Price is falling. Overall volume is declining. Volume is strongest on upward sessions than downward. I would read that short-term volume profile as bullish, but it isn't leading to any bullish movement, so it may not be particularly reliable. Short-term, the close here, $1.47. The close here, $1.25. Price is closed lower. On-balance volume is higher. So there's some bullish divergence between price and on-balance volume, but ADX tells us there's still a downward trend. It's got a long way to go before it's extreme. RSI, there's some bullish divergence here. It's pretty weak though. And money flow, no, not really. Yep. If we go back to this point here, the close here, $4.96, the close here, $1.56, but prices continued to fall after that bullish divergence. And price keeps on falling. So that didn't lead to anything. ATR continuing to decline and stochastics in neutral territory. I do not like the look of this chart at all. It's in a bear market and there is no extreme trend. RSI, money flow are not oversold, and I don't see bullish candlestick reversal patterns. For this one, I would expect it's probably going to continue lower from here. That's all from me with Kadena. Thank you so much for watching, and thank you for your support.